Guys, let me preface this in saying that this is not financial advice nor tax advice. Yes, I am an international business consultant, but it is not tax or financial advice. Because in my opinion, investing in index funds such as the S&P 500 is absolutely one of the best choices you can make. Okay, it's one of the best investment choices you can make. But I feel like there is a better one, because yes, the S&P 500 went up by 83.77%, so that means if you chucked in $100,000 in the past 5 years and you held till now, the $100,000 would have jumped to $183,000 and $777, right? It would have jumped by $83,777. And this is not factoring in its like negligible dividend yield. Instead, what I think is good is having part of your portfolio also consisting of ETFs, such as the JEPQ, the JP Morgan Equity Premium Income ETF, which they basically mean like they basically just sell cover calls and just pay out investors, right? It's very nice, but this ETF, yes, it went down by 1% in the past 5 years, but when you factor in dividend yield, they actually yield you a higher result than the S&P 500, right? The S&P 500, keep in mind, only started popping off when there's just mass amounts of money printing done by the US government, right? If there wasn't a mass amount of printing, then it wouldn't even have risen this high. The S&P 500 gives around 7% a year. It wouldn't have rose 83% in the past 5 years if not for the mass money printer, right? Oh, this is max. It only covers 1996, but keep in mind this only happened because of super inflation. Like 40% of the current circulating supply was printed in the past 5 years, something like that. But in normal market conditions, where the JP Morgan ETF is giving out 13% dividend yield, right? 13%. If you compound that, if you calculate that in a compound formula calculator, which I have right here, if you have an initial deposit of $100,000, you don't ever put in money whatsoever ever again, right? And keep in mind the JP Morgan ETF pays you out monthly, so the compound frequency is monthly for 5 years and the annual interest rate is 13%. Okay, that means that you'll be getting $190,886 over the next 5 years. That is more than the super inflated S&P 500, right? You can make the argument that the JP Morgan ETF is also inflated due to the money printing, but both of them were under the same condition. The ETF yielded high results because if you calculate it, right, like I said earlier, 83%. If you chucked in 100K in the past like 5 years ago till now, and you held it to now, the 100K would have turned into $183,770. Okay, factoring in, I don't know, the 1% dividend yield. Well, what are you gonna get? 1%. Okay, let's calculate that. Okay. Alright, how do I get rid? 1% dividend yield. You would gain $5,000. You would have gained $5,000. So $183,770 plus $5,000 still would have been less than if you invested it in the ETF, right? Like, I don't want to sound like a shiller, but I really like ETF investing. I really like dividend investing because dividend yield, it just feels like you are actually making money from what you're investing in. Yes, it's nice for the number to go up, right? It's very nice to see the S&P 500 go from 3,000 all the way to 5,000. It's very satisfying. But at the same time, me personally, I really like when I just sit there and get paid out. I'm a very lazy person. I really enjoy when I sit there and get paid out. It's very rewarding, right? So I really like ETF investing, so you should give it a shot as well, right? Chuck in, like, I don't know, whatever you're comfortable to chuck in, and then see how it goes, because this is genuinely insane, the dividend yield. And if you think this is a scam, it's not. JP Morgan, if you don't know what JP Morgan is, it's one of the biggest banks in America. JP Morgan Chase. It is the largest bank in the United States and the world's largest bank by market capitalization as of 2023. It's crazy. It's really good, and it has a good amount of history as well. It has never fallen in the past 140 or so years. I think the ETF will be a solid buy. So, what do you guys think? Let me know in the comments if you like dividend investing or just chucking it into the S&P 500 and let it compound over the years, right? Or crypto. I hold 50% of my portfolio in crypto, and I'm down 50% right now. It's really bad, but it's gonna go up, guys. It's gonna go up. So I believe in it. But yeah, in the meantime, the JP Morgan ETF, it's coming in handy. It's very nice, and like 13%, and let's just say you deposit, like, I don't know, $500 monthly. Boom. Now it goes up by 40,000. It's crazy. It compounds so quickly over, like, in 5 years. And then you'll definitely be, if you're young like me, I'm 20. You're definitely going to be putting in more than 500 monthly, because what bills do you have to pay? Unless you're living by yourself and you have a crib, right? I'm living with my parents. So what bills do I actually have to pay, except for car insurance and, like, my driver's license or food, right? Because I have to meal prep for myself and stuff. What actual bills do I actually have to pay, apart from, I don't know, yeah, like I mentioned earlier, car insurance, number plate, driver's license, and some taxes. Nothing much. I can even put in 1,000 a month, and it would be chill. And boom, it will be closer to $300,000. I would have made nearly $200,000 in 5 years. And if you do 10 years till you're 30, it'll be even more crazier. It'll be $600,000 with $1,000 regular deposits. Okay, but probably not, because near your 30s you'll probably be I don't know, trying to get married and stuff. So I'll bump that down to by $200 and say you regularly deposit $800 a month, right? That's still $550,000. It's crazy. So what do you guys think? ETF investing or index fund investing or crypto? One or the other, guys. Anyways, have a great day. See ya.